What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we see another strong rejection from the negatively sloping 20 simple moving average, so it does beg the question if the stock market is getting ready for that next leg lower. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday on SPY we were down 2.28%, and we did see that very sharp rejection from this negatively sloping 20 simple moving average, which is significantly going to increase the probabilities we're coming back down here to retest the lows around 349. Keep in mind this is still a very strong downtrend, and we have a very negatively sloping 20 simple moving average, and we still do have this gap of resistance, which is going to give the bears confidence to short at resistance. Remember, the bears have a full advantage of a very strong downtrend and very weak price action because we are in such a strong downtrend, with price action closing below all of the moving averages. So if you're a bull, you need to be very cautious buying here because this is a very powerful rejection from resistance, which means there is still the possibility we are still going to make another leg lower and continue this trend of lower highs and lower lows. We are going into midterm elections, which is typically a very volatile period as it is without the bear market added into it, so do expect plenty of volatility as we approach the end of October. And do respect this very strong resistance zone around the 20 simple moving average right around 368. Remember, we need to get all the way back over SPY 378 to start breaking the downtrend and then weakening the bears position at resistance. But right now we still have bears waiting at all of this resistance above, and there will be many big bears up there at 390. So there is no reason to be getting overly bullish on this market until price action does something with a higher low, higher high situation, which is still a possibility after Friday's candle, but we will need some type of gap up and run and then breaking back over about 370 to 373 to get that higher high. So yes, the scenario of reversing the downtrend is still a possibility, but that was a very high volume rejection on Friday, so you will want confirmation before you start getting bullish. On a breakdown below 350, we should be making brand new lows, which will be right around the 346 to 344 range. And then we'll see if there's any buyers at that level, because if there's not, we could still go much lower because we are still in a very strong bear market. Now do keep in mind this level at SPY 358 is the weekly 200 simple moving average, and we close right next to that level. So we don't have any strong direction from the weekly chart of whether or not we are above or below that level. But if we do start getting Friday weekly closes below SPY 358, that is going to start looking more like a secular bear market. So just respect these very critical support levels just below, because if we keep going much lower below these levels, we could go for a full next leg lower on SPY, which could be all the way down there in the 330s. On the Nasdaq 100 triple Qs, we were down 3.01%, and again the triple Qs had a very strong rejection, and they did not even reach the negatively sloping 20 simple moving average. We saw the rejection from the 13 EMA. So that level of resistance is 271, and we could be coming all the way back down to either 258 or the low right around 255. And if we break below that low, we do have the channel bottom right around 251. So again, we could see a very strong downtrend of lower highs and lower lows, and we continue to make closing lows each and every week. We continue to see lower price action, so there's no reason to be going against this trend for any prolonged period of time. If you're taking long trades, you need to be very careful trying to swing trade because this is a powerful downtrend. And the next level we need to break above on the triple Qs to break the downtrend is up here at 284. Upside resistance levels before that will be right around 275, and the gap fill right around 279. So watch all of that resistance because bears will continue to show up at that level. And right now the big bear on the triple Qs is sitting right up here at this level at 293. So it's going to take a lot of room for the bulls to start breaking a lot of resistance before this bear starts getting scared away. On the Dow Jones, we were down 1.24%, and you could see the Dow Jones was back over the 20 simple moving average, but found resistance at the previous daily high and that resistance trend line of resistance right there at 303, and we did see a very powerful rejection from that level. Now, relatively speaking, the Dow Jones is still holding up relatively well because we did get the strong bounce off the previous daily low at 287, and the bulls did step in before the weekly gap fill at 285 did fill. However, if we go down at this point and we do fill that gap, this is now going to look like a confirmed double top breakdown if we do close below the neckline at 287, which means we'll go more than just closing the weekly gap at 285 and more than likely hit that price target at 276. So the bulls will need to protect this support right around 287, otherwise the bears have full advantage to push for a full next leg lower, which is going to equal a lot lower prices for that next leg lower, which will more than likely happen by the end of the month. So if you want to be bullish in the Dow Jones, you need to see price action now closing back over 303 and then getting back over this critical risk level at 312. On the Russell 2000 IWM ETF, we were down 2.68% on Friday, and the IWM looks a lot like the Dow Jones, getting rejected from that negatively sloping resistance trendline right there just below 174. IWM bulls need to get back over 176 and then that risk level at 178, and the critical downside support is still the June closing lows at 163.75, because below that we could go for the next leg lower at 159.5. You can see we are still in a powerful downtrend, and we did just get a very strong rejection from the resistance trendline. So do remember, these are still downtrends until the bulls can break out above another daily higher high. On the ARKK ETF, we were down 5.69% with that strong rejection from the 13 EMA, and we're right back down to the price target, which is right here, right around 33.7. I do think this price target could hold up as a strong support, but there's always the possibility we break down below it. And if we do break down below the 33 range, we are looking for ARKK to go all the way down to 30. Upside critical resistance that the bulls need to break will be right here, right around 38, and then 40 to 41. And do not get bullish until the bulls can prove they're reversing this very strong downtrend, because this is a very powerful bear market. On the VIX, we were up 0.25% on Friday, and the VIX is still in a bull trend of higher highs and higher lows, and the VIX is still elevated above 30, so this is going to remain a very volatile market. I'll remind you once more that volatility can work in both directions, so the bulls could still crush the VIX back down below 30 and then back down below 28 to start developing a higher high. But that is going to take a lot of work for the bulls, and you are going to see it happening in the VIX if the VIX on Monday starts crushing down below 31. On Bitcoin, we're currently down 0.42%, and Bitcoin is continuing into the trading range between 19,000 and 20,000. And remember, 19,000 is a very critical support level of demand, because there have been a lot of buyers at that level since June. On a break below 19,000, look for the next leg lower at 17,000, and on a bullish break above 20,000, look for the next leg higher at 22,000. On Amazon stock, we were down 5% on Friday, and Amazon had a very strong rejection from the 13 EMA and right back down to the support at 106. If we break the support at 106, we're looking for that next support at 102. And if we break 102, we'll very likely start down towards another bear market low all the way down here at 88. Earnings is coming up right around the corner, and we have a ton of gaps to fill to the upside. But overall, we are still in a powerful bear market downtrend until Amazon can get all the way back over 121. Upside resistance will be 113, 116, the gap fill at 119, and the previous daily high at 121. On Microsoft stock, we were down 2.42% on Friday, and Microsoft did reject from the negatively sloping 20 simple moving average, and Microsoft has been a very good leading indicator for the rest of the indices. So I would watch the support level on Microsoft right here at 225, and if that level breaks down, we are more than likely going to see continued weakness in the indices. Now on the flip side of that, if Microsoft can get back over 235 to 237 and break this resistance at 242, that is very likely going to be a leading indicator that the indices are about to break out. Above 242, we have the gap fill right around 246 and the previous resistance at 252. On Nvidia stock, we were down 6.13% on Friday, and Nvidia is back down below this support at 115 yet again, which means we could be retesting the lows just below 109. The bulls need to break all the way back above the resistance trend line, which is now at 124, and then the next resistance will be right around 135. So do not get bullish until we can at least see Nvidia breaking 125. On Tesla stock, we were down 7.55% on Friday with a very bearish engulfing candle that fully engulfs the bullish engulfing candle that we had the day before. So as you can tell, we are getting very close to full-blown capitulation in Tesla. Now I will tell you, from this level, I do think we could get a strong dead cat bounce back up to the 230s before we eventually get more capitulation down below that 209 support level, which easily should take Tesla down to 186 and possibly even lower. Now in the event we do not get the bounce, we are very likely going to continue to flush to the downside, as many people are getting stopped out of their long positions below support. So if you are a Tesla bull, just be aware of that. In the event we do start to bounce on Monday, you will want to see this support level at 209 acting as support and not resistance, which means if we bounce up to 209 and get rejected, you are looking for a very quick flush to the downside, because that is going to be a very ominous sign that there are still no buyers in this stock. Now do keep in mind, earnings is literally right around the corner in just a few more days, and that should be a catalyst for either direction. On Apple stock, we were down 3.22%, and Apple was nearly about to close the gap at 145, but got rejected before we got there, right below the 20 simple moving average and the resistance trend line, and came all the way back down to support at 138. Below 138, you're looking for support at 136 and the gap fill at 133. and below 133 you're looking for the test of the June closing low at 130, and you can clearly see Apple is still in the downtrending channel, so do not get bullish until it get back over 147 and break out of the downtrend. On the financials, we were down 1.68% as the financials did report earnings on Friday with the banks, and as you can tell, there was a rejection right below the 50 EMA. Overall, this is still going to be a very strong support around $30, so it's going to require a break below that critical support to get another leg lower, which could be a very ominous sign that we are going into a secular bear market. On the industrials, we were down 2.19%, back down below all the moving averages with the price action, and very likely still trying to fill the gap to the downside just above 81. The healthcare sector was down 0.67% on Friday, getting rejected from the negatively sloping 50 EMA, but finding support right there at the 20 simple moving average. You could go either direction from here, so watch the 20 simple moving average of support and the 50 EMA of resistance. The energy sector was down 3.73% on Friday, continuing to get rejected around this resistance zone at 83. So do not get bullish until we can break through this resistance, and then we could go up for the next leg higher right around 87 to 88. But if we do get a breakdown below 79, look for a retest of support right around 76 to 77. So jumping back over to the S&P 500, without a doubt, we are still in the bear market and we need confirmation in the price action of higher lows and higher highs until we can say this downtrend is ending. So there is no reason to get overly bullish until we get that confirmation. Remember, we're in a downtrend until it's not, which means we're expecting lower highs and lower lows, and we're expecting bears to continue to show up at resistance levels. Always use great risk management, and as traders, you need to make sure you have a plan for either scenario and then make sure you're ready to act accordingly, because the market can go anywhere it wants to go and you need to be prepared to follow the price action because nobody knows what's going to happen, and that's why we got such a crazy volatile day on Thursday followed by another crazy volatile day on Friday. With the VIX above 30, expect this volatility to remain and make sure you are protecting yourself with great risk management. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to subscribe, just click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.